Good afternoon and welcome to LIBOR's Wednesday webinar. My name is Marianne Monteleone, Vice President of Professional Development for the Long Island Board of Realtors. In recognition of Wellness Month, May is Wellness Month, we have taken that topic and have applied it to, of course, mental wellness, financial wellness, business wellness, and today's guest is no stranger to us, Brent Lancaster from Louisiana, who is bringing us the topic of business wellness, building a strong financial wellness for today's realtor. I just want to tell you, so I don't miss anything, I want to formally introduce our friend Brent, and then we'll turn it over to him. Brent Lancaster, who holds the ABR, GRI, SRS, and ePro designations, combines his love of the business of real estate with his passion for education. He believes in delivering tools agents can use immediately to improve the quality and efficiency of their business. He is a broker owner of his own real estate company, Brent Lancaster and Associates, and also president and CEO of one of the nation's oldest real estate schools, Bob Brooks School of Real Estate. As I said, he lives in Baton Rouge, Louisiana, with his wife of 20 years, Laura, and his two children, Leighton, 11, and Nate, 8. So we welcome you, Brent. Thanks for being here with us, and we turn it over to you.
Thanks, Marianne. Thanks, Ethan. Really appreciate everybody tuning in. So thank you so much. Really appreciate being here. What we're going to do today is talk a little bit about your solid financial foundation. So that's kind of one of the things that we're going to be looking at sort of as we get forward today. As Marianne said, my name is Brent. Just want to welcome you in. Really appreciate you being here. We've got an hour, so I'm going to try and give you as much material as you possibly can. Before we begin, I do want to mention that that all of the information that we're going to have is going to be delivered to you. So I've given them my slide deck. So feel free to take screenshots or notes or whatever you need. But also, this information is going to be available to you in PDF format. But it's important. I just wanted to sort of get that, get that out there and get rolling with that as well. So welcome in. First of all, really appreciate the opportunity. What we're going to do today is talk a little bit about business, and what's important about business is it's not necessarily the money you make. It's the money that you keep. And it was something that a broker taught me many years ago. And it's something that it's sort of resonated with me as we moved through there. So there's a lot of courses out there that kind of deal with lead generation, business building, different things like that. But there's not a whole lot that have to deal with actually keeping the money that you make. So that's what we're going to do today, is kind of talk a little bit about your foundations for success in terms of who needs to be on the team, what we need to do, and all those things as well. The other thing I wanted to mention is feel free to any questions or comments that you have, put them in the chat or put them in the Q&A. I'll be more than happy to do that. I'm monitoring those as they come in, so I'll ask those as well. My lawyer made me include this, so everything's different here. I'm not giving legal advice or accounting advice, but it is important that we talk about business, and some of those things are going to be there as well. So this is the short way of saying if your defense is Brent says, I'm probably going to lie and say that I never said it or something like that. I don't really know as well. One thing about business is we have to talk freely about money, right? It's something that we specifically need to address. I don't know that as humans, really, I don't know if it's sometimes it's a taboo topic, right? So we're not taught really about money in school. Sometimes our parents and friends may not be the best example as it relates to money. And sometimes the choices that we make have consequences. So that's really what we're going to do today, is talk about business, talk about money, and really try and generate some of those things as well. My goal, at least for for all real estate agents out there is to make sure that that they don't have a job, because job to me stands for just over broke, right? And there we go, just over broke. So I really want you to have a career and a job. There's a lot of agents that were successful 1 year, maybe 2 years, but ultimately we want this to be a lifelong career. And as a result, we don't want to have it a job. So that's kind of where we're going to head today. Couple of rules. There's a couple of things that we're going to talk about. Number one, your financial wellness is going to be unique to you. Newsflash. We're not all created equal. So some of you are single, some of you are married, some of you are separated, divorced, some of you have kids, some of you don't have kids, some of you have grandkids, some of you have parents you're taking care of. And so everybody kind of has a different life situation. Everybody has a different financial situation. So my goal today is to give you some foundational principles where you can build on. But make no mistake, it's going to be very unique to you. And so you want to make sure that you design a plan that's based on your life, not necessarily based on somebody else's life or some competitor's life or anything like that. The second thing is we have to be honest. Any type of foundational business has to be grounded in reality. I always enjoy titles of courses that say, we're going to double your business in a year. And while you got my attention, how realistic is it for every agent? Well, realistically, it's probably not all that realistic. Our numbers came out. As Marianne said, I'm in Baton Rouge, Louisiana, where we have a cold front coming through, and it's mid 80s instead of mid 90s. But ultimately, the numbers in Baton Rouge, Louisiana, we're down 30% year over year. So there's 30% less transactions at this point in time in 2023 as there was in 2022. So if I'm looking to double my business, realistically speaking, could I do it? Maybe. But is that the way I'm going to plan? More likely not. So I do think being honest and having something that's grounded in reality is going to be helpful. Now, and the third thing is be nice to yourself. We all have made financial mistakes. Some of you might be in financial mistakes now. Some of you may have had financial mistakes in the past, but there's no need to beat yourself up over it. Today is the day where you can quite literally press the reset button, build on some of these foundational principles, and go ahead and be successful and start keeping more of the money you make. So when we kind of talk about the rules, these are the way that we're going to follow as well. The last thing that I'll say kind of as an introduction before we jump into the meat of the material is it might take a little bit of time, and it's probably going to take a little bit of sacrifice. So obviously, we kind of live in an instant gratification world, but ultimately, I do think there's a pattern of consistency that agents can use. And if we continue with that pattern of consistency, then we're going to see success over time. So just know that typically, if there's a quick fix, typically it's going to be too good to be true should that happen. Oop, I lied. I told you I was done setting things up. I'm not. Now I'm done setting things up. So one thing I want to talk about is business and personal. And a lot of times in whether it's a business planning or in tax world or that sort of thing, they say, well, your business is over here and your personal is over here. In real estate, we don't work that way. A lot of times we're a sole proprietor, we're an independent business owner, and my business does affect my personal life. My personal life does affect my business. And so I don't think that it would be beneficial to say, hey, don't worry about what's going on in your personal financial world. Let's talk about your business world. It's not really there as well. So what we're going to do is talk about both, right? What's required to run a profitable business is the same that's going to be required to run a financially healthy household. So mix them up. We're going to combine some of those and talk about how we can run our business and ultimately run our personal financial household as well. The two biggest problems that I have found when working with agents from a business planning standpoint, number one is perfection. What do they say? Perfect is the enemy of good. right? And we can sit down and try and hone in this business plan all the way down to the penny. Number one, that's going to take too long. So we're not aiming for perfection. We're aiming for progress. We just kind of want to move forward when it comes to laying the foundation. The second is procrastination, right? It's May 24th. And everybody says, well, we'll just wait till June 1st, right? Because June 1st, or maybe we'll wait till July 1st, because that's the second half of the year. We'll wait till next quarter, or by the time we get to July, we'll say, you know what? I'm kind of busy right now. We'll just kind of wait till the winter, or we'll wait till January 1st. I would disagree. I would say today is the day where we can start laying really a solid financial foundation for ourselves. So this is a team. I do think the first thing you need for a solid foundation is you need people on board. You realistically, I don't know that you can do it yourself. And so we're going to talk about who you need to join, who needs to join the team, specifically what questions you can ask them, right? And in terms of how to better your business, because ultimately, you don't know everything. All right. I don't know everything. So you got to have a team in order to do that. So the first thing we need to realize is you can't do it alone. And even Jesus had a team, right? We had the disciples. So ultimately, it's something where we all kind of need some support somewhere in terms of doing that. So let's take a look at what our team members look at. All right. We've kind of numbered them there 1 through 8. For those of you that are, and what we're going to do is take these kind of one by one, except for this guy right here, the ninja over there. That's a joke for those of you. I can't really see you, but if you're laughing, then you get a gold star. I put this in there because as I was teaching this, my wife is type A. I am not type A. And she's like, you can't have an odd number. We need to level everything out and it needs to be even. So I just sort of put one in there. So for those of you that are type A, you're welcome. We have something even here, but there are kind of 7 members. Some of these are going to be a little bit more important than others, in my opinion. But ultimately, in order to build a solid financial foundation, these are the folks that we're going to have to get to assist us to become better at business. So let's kind of take a look at these one by one. The first one, if you have anybody that is contributing financially to the household, right? So if somebody is contributing to the household, whether it's a spouse or a partner or whatever that looks like, then they need to be involved in the decision-making process. And what happens is typically when you go to a course like this, or you go to some financial aspect of it, and you want to make a change, and there's somebody else that's living with you or contributing to the household, they kind of need to be on board with the change, right? They need to be on board with what's going on. So I think the most important part, the most important member of the team is everybody that we're sharing assets with, right? And the big thing that I get is my husband takes care of the financials, or my wife takes care of the financials, and I don't look at the financials. And yes, one person may be a numbers person, and the other may not be such a numbers person. But to me, that's irrelevant. Everybody kind of needs to know what direction the ship is going. So you do need to kind of bring your spouse or your partner or whoever it is that's contributing to the household. So if we're using shared money for mortgage, rent, that sort of thing, if we're living together, if we share assets, again, we need to be able to make sure that all of us are going into the same direction. So it's worth a conversation just to sit down. What you realize is everything is good when the money's good. And then all of a sudden, if we have a down year or a less than stellar year, then all of a sudden we start noticing chinks in the armor. We start noticing cracks, right? When you start thinking about the number one reason that there are divorces and fights and different things like that, most of the time it's going to be over some type of financial aspect. So I would encourage you to at least have that conversation. And again, it goes back to something that we talked about a little earlier. Sometimes money's hard to talk about, right? Sometimes it's hard to discuss, but I do think it's important to sit down with the family and say, what are your financial goals, right? When was the last time that you ask someone in your household, when do you want to retire? Do you want to retire? What are your financial goals? Where do you want to go? What are your dreams, right? And those are shared experiences that we can all work towards. Number one, it'll make you work a little bit harder. Number two, it'll make them work a little bit harder. So make a conscious effort to bring everybody that contributes to the household just to have a conversation. I go a little bit overboard. My wife is also my business partner. And as Mary Ann said, we've been the next month, actually next week, we've been married 20 years. So that's going to be fun. We'll talk about her as well. But we try and make a lunch once a month, and we go to lunch once a month. And I make a point to, that's what we talk about finances. That's something that we have to do. And we talk about it at other times, but ultimately we kind of have a little family business meeting over lunch in order to do it. So I'll probably go overboard, but hey, what you going to do? So the spouse is probably going to be number one. The second is an insurance agent. You probably have an insurance agent. You pay homeowners insurance, renters insurance, automobile insurance. But there are a couple of things that just, and this is sort of just a check to make sure that we're doing what we need to do as well. What are your limits, right? What are your limits specifically as it relates to what are the risks? I love being in real estate because typically we work on happy things, right? When you think about an insurance agent, you really only need an insurance agent when bad things happen, right? So you don't need automobile insurance until you get in an accident. You don't need homeowners insurance or renters insurance until there's a fire or a break-in. You don't need life insurance until somebody dies, right? So insurance agents always have to deal with the bad. We in real estate, we kind of get to deal with the good. But that said, I do think it's important to look at your life and to look at your business and say, what are the risks? What are the risks that are associated with this? The first thing that we'll look at kind of is automobile insurance. Right? What happens if you're putting clients in your car? Then your insurance, you need to have sufficient limits in order to do that. If you're not putting clients in your car, if you're using your automobile for business, which hopefully you are, we'll talk a little bit about that later, then you need to make sure that you have the proper limits that are going to be covered. What's the worst thing that could happen? Well, I put a physician in my automobile. I accidentally run a red light. I get in an automobile accident. The physician breaks their arm, and they're no longer able to do eye surgery or anything like that. You think you're getting sued? Yeah, you are. Do you have enough limits in order to cover that? So just a couple of things that we know about those things. Umbrella policy is probably one of the better ones in terms of, it's called liability insurance. It's umbrella policy is more or less an excess liability insurance. And it's relatively inexpensive. And basically the reason umbrella policies are good is because it covers several different policies. So you may have automobile insurance and homeowners insurance, and I get a $1 million or a $2 million umbrella that covers if somebody gets injured on my home, somebody gets injured in my car. So that could be helpful as well. So if you have your insurance agent, just call them and say, hey, I was in a class with this guy this time, and he said something about an umbrella policy. Is that something you'd recommend? Right. And so again, it's something you can talk to them about in terms, is it something that you need? But bang for your buck, it's a pretty good coverage. And by the way, I'm not an insurance salesman. I'm not here to sell you anything. I'm not here. I don't make any money off of any of this, but it is things that I think you need to know as well. Professional liability, errors and omissions. We make mistakes in real estate, and some of those mistakes we get sued as a result of. So particularly if you're a broker, you need some sort of professional liability. If I believe New York's a mandatory E&O state. I can't really remember, to be honest with you. I knew it at one time when I was there in January, I knew, but I have forgotten since then. But if it's mandatory, then know what the limits are. If it's not mandatory, then it might be something that you want to take a look at. I know in Louisiana, we have a mandatory E&O insurance, and the limit's only $100,000, which means what's my average price point for my sale? It's not $100,000. Right. So if you do have E&O, and that's what errors and omissions, the short version of errors and omissions is called E&O. But if you do have E&O, it's something that you need to take a look at. Think about, number one, what's your average price point? Number two, what's the limit on that policy? And number three, what's the deductible? Some deductibles are $1,000, some deductibles are $5,000. But when it comes to professional liability, there's two things that you need to be aware of in terms of, do they cover? And it's important. So call your broker and say, hey, who's our E&O policy with? They're going to tell you, I think there's only like 4 companies, maybe 5 companies that actually write E&O insurance. So it's probably one of them. The first thing you need to think about is lawsuits as they relate to fair housing. There are a lot of E&O companies that either don't cover fair housing claims or restrict fair housing claims. Meaning if for instance, our E&O policy has a $100,000 limit, but if it's a fair housing claim, they're only going to cover for $25,000. All right, with a $1,000 or a $5,000 deductible. So ultimately, fair housing's number one, and wire fraud's number two. Right? What happens if I get sued as a result of wire fraud? A lot of E&O companies aren't covering for wire fraud anymore, or again, they're covering for small amounts. So just some questions that you need to ask, right? I don't like spending a whole lot of time on this slide just because we talk about bad stuff, but ultimately, I would rather us go through the mental exercise of thinking about potential bad things than actually going through them and us not have the coverage. So when you talk to various agents there as well, again, I could probably do a 20-minute diatribe on life insurance, but I'll sum it up in about 60 seconds. If someone is relying on your income, whether it's a parent, a child, a spouse, whatever it is, if someone's relying on your income, what are they going to do if you die, right? And life insurance is kind of designed for that. So a term policy, I don't care how old you are, a term policy can be relatively inexpensive, and it can help with those individuals that rely on your income. So I always tell the joke, I'm worth a whole lot more dead than I'm alive. But ultimately, if I die, my family, as Marianne said, I've got 2 young kids. I don't necessarily need to make them millionaires, but I'm selfish. I want them to be sad if I die. I don't want them being mad at me, not knowing where how to pay for my funeral or where the next mortgage payment's coming from. So we have life insurance that if I die or if my wife dies, there's a sum of money. It's a term policy where they can just kind of live for a year or 2 years and not have to worry about it. I want them to grieve over me, right? And not have to worry about those things. But ultimately, life insurance, again, is something that we can take a look at. The attorney, that's number 3. Now, I don't think you need to put an attorney on a speed dial. You don't need to put them on retainer, but there are some questions that I do think could be important there. Number 1, I'm a big fan of a will, right? We talk about business and personal. If you've ever done a succession, if you've ever dealt with kids after selling mom and dad's house after mom and dad pass away, and you have 4 or 5 or 6 kids, you know how interesting it could be. One of the highest commissions that I ever got, it was several years ago. We sold a piece of property where the 3 children walked away millionaires. Each one of them walked away multimillionaires, and they don't speak to one another. And that just kind of makes me sad. So when the matriarch or the patriarch dies, sometimes people's attitudes change a little bit. So I'm a big fan of the will in turn. And you don't have to be rich to have a will. A will should cost you $300, $400 max. But ultimately, if I die, here's what I want to happen. Right. That's really all a will does, because if you die and you don't say, here's what I want done with my assets, people can come out of the woodworks and think that they're owed various assets. So I'm a big fan of a will, and an attorney can help you do that. You want to protect, speaking of assets, you want to protect those assets in the form of an LLC or an S Corp or a corporation there as well. We'll talk a little bit more about the tax implications of setting up your business. But if you're a single member LLC, and your commissions can come into that single member LLC, it really allows you a lot of advantages from a tax standpoint, but What happens if that LLC gets sued? What are kind of those? LLC stands for limited liability corporation, right? And that means you're limited on the liability that you have. So talking to an attorney about that, they're going to look at it a little bit different than a CPA, because they're going to look at it from a defense standpoint more so than a tax standpoint. So these things are set up a little bit differently, but I am a big fan of making sure that those things are done correctly. So we've got the spouse, we've got the insurance agent, we've got the attorney. Now let's kind of switch gears just a bit and talk a little bit about, excuse me, that's the wrong button. That's the right button. And talk about bank accounts. And I think from a bank account standpoint, if you're going to set up a single member LLC, and I just think it's a good idea to incorporate yourself in some manner, you obviously need a bank account. So if you're running your business like a business, one of the things that the IRS wants to make sure is that you're running your business like a business, not a hobby. So if you are running your real estate business through your personal checking account, does that look like a business? Probably not. So I would recommend that you at least at something that's very simple is just open up a business checking account, right? And so ultimately my personal goes through here and my business goes through here. So my commissions can be paid into this business operating account. All of my cell phone, my gas, all of my business related expenses come out of this. And if I want to pay myself, I can move money from my business account to my personal account. Does that make sense? So in order to run your business like a business, you got to look like a business. And it starts with a simple business operating account. Now, you can get really complex with all of this stuff, and we'll kind of get there as well. I would recommend a debit card or a credit card for either one as well. I have my wallet. When I was with some of you in January, I pulled out my wallet and I only had 2 credit cards. I've got one that's personal and I've got one that's business. That's the only thing that I carry other than my driver's license, mainly because I put all my business expenses here and my personal expenses right there. So debit card, credit card, and you know, I'm not here to get into the whole credit card, should you have a credit card debate or not, but ultimately for tracking and for protection purposes, you need to separate. That's kind of what I'm trying to get to. You need to separate those things as well. Generally speaking, if you're keeping a balance on your credit card, you're spending more than the money you're bringing in. So again, we kind of need to have some rules as it relates to that. And in general business, if I spend more money than I have, I'm broke, right? If I make $1 million and I spend $1,001,001, I'm broke. So ultimately, we need to look at credit card and credit card balances that same way. Simply means we just spent more money than we have. Ultimately, they're good for safety and tracking. And then I'm a big fan of some savings accounts. So if you're keeping score, if you're counting, we've got 2 checking accounts here and 2 savings accounts here. I like one for taxes. We want to make sure that we save some for taxes. We can have a personal or a business savings account. Like if I know that I'm paying automobile insurance and maybe I pay it every 6 months, we can kind of put some in the savings account. I like to take things out of my operating account and put them in a savings account, mainly because I pre-spent them, I guess is the way. You can get crazy and come up with your own investment account or retirement account. You can have a long-term savings. You can have a short-term savings. You can have a debt payoff. So you can kind of really get creative with some of these. And if I had a little bit longer, we can kind of talk about how we can how money can flow through that. But ultimately, what I would recommend is some sort of a savings account that we have at a minimum, something to set up to put your taxes in a separate account that, hey, they generate a little bit of interest. So if I'm opening up all these accounts, I probably need to go find a banker. And I know there's a lot of big banks that are out there. Personally, I'm a big fan of your local banker. You want to walk into a local branch and you want to say, I want to talk to the branch manager. And you want to get a personal relationship. I'm a big fan of local branches of a big bank. Try and find the local branch manager. If it's a small bank, again, I want to know who's in charge. So credit unions can be super helpful, but I do want to find someone of influence at that branch. All right. They want personal connection. Also great for referrals, right? So think about this. Some bankers, all right, make money off of generating loans, right? So bankers are looking for loans. Well, sure enough, let's say that somebody walks in and says, I want to buy a house. Can you help me? A banker's going to say, sure, I can help you. They can help you with the financial aspect of it, or they can help that buyer rather with the financial aspect. Why don't you be the agent? So getting, talking to someone of influence at the bank, who's generating all the loans, who's working with the financial management, why can't they be a referral source for you in terms of generating business? So there's several different ways in order to do that. Credit unions can be super helpful, but ultimately, there's a couple of reasons that we're going to look at this. Number one is for investments. We're going to talk about the importance of growing your business and quite frankly, working yourself out of business through investments that you're going to make. The banker is going to be real key in helping you fund those things. So personal connections really do work. So I'd recommend at least introducing yourself to a banker there as well. Walk in there and say, I'm looking to change banks. All of a sudden, you're going to get somebody's attention. If you're already banking there, you've got their attention. If you're not banking there, then you definitely have their attention. So say, look, I'm in real estate. I'm looking to open several different accounts. I'm looking to move my personal money here. I kind of want my business banks over here. I'm looking for somebody to start a business relationship with. Just want to interview you and see if you're the bank that we need. So I do think having a banker there as well, this costs you $0. So that can be super important. Let's talk a little bit about savings and investments because savings and investments are two different things. And if you noticed when I looked at all those small savings accounts, we had one that was called, or two, one was called long-term savings and one was called short-term savings. And the other one, we actually had an investments account. All right. So a lot of times we look at savings and investments as the same thing, but I would argue that they're completely different. Savings is money that's waiting to be spent in the future, right? I'm looking to buy a new car. So I'm going to put money, sock away some money every month. And when it comes time for me to buy a new car, then that money is available. I have to put a new roof on a commercial property that I have. So I'm going to put some money away. And when it's really time to have that roof, we're going to have enough money in order to put that. So say I want to go on vacation, right? So we're going to put some money away in a savings account, and that money is going to be used for that vacation. So savings is money that's waiting to be spent in the future. That's why we put it in its own separate account. Investments is money that's going to create more money, right? Think about the stock market. If I put money in the stock market, hopefully it's going to appreciate. And ultimately that's money that creates more money, right? Same thing with real estate. I want some money that's put aside. So when I see a real estate investment, I want to be able to jump on that as soon as I possibly can. So that's why I like two separate accounts, because savings is completely different from investments. So we want to separate those so we can use that money for what it's intended. So from a savings standpoint, and again, I'm too old to start saving, or I'm too young to start saving. However you kind of want to look at it. My favorite Chinese proverb: the best time to plant a tree was 20 years ago. The second best time is now, right? So it never hurts to start saving today. Unfortunately, 66 million US adults have $0 saved for an emergency. And this is kind of where savings can come in, is really get you out of a jam. 47% of Americans said they could either not afford an emergency expense of $400 or would cover it by selling something there. 28% of Americans have saved 6 months worth of expenses, which means 2/3 of Americans don't have 6 months worth of expenses that are saved, which is kind of an unfortunate piece there as well. So savings really can be there, but to plan for the unplanned. I like looking back at our statements, just kind of in our general family. Usually there's, a couple $100 a month that just get spent, right? And there's always like I always call them minor emergencies, where when I look back at my statements on the year, one time a month, there's some unplanned expenditure. So I can budget as much as I want, but invariably somebody's got to get a brand new tire, or we had some unexpected dance expenditure for my daughter's dance recital, which that's, you would think that they would be better at planning those things, but ultimately they're not. But every single month, it's some type of expenditure that I didn't plan for. And that's really kind of what your savings is there for, is to cover them so you don't necessarily have to stress about it. So knowing that you have the money there is an ultimate stress reducer. So, what's an emergency? If we have an emergency fund, what's an emergency? So just right, you can't see it, but on the other side of this wall is this parking lot. This is a boulevard in Baton Rouge, Louisiana. My office is kind of right there. That's my next door neighbor. You can see well, maybe you can't, but there's a little bit of water that's sitting right there. This was in 2016 on a Sunday, about 3 p.m. on a Sunday in 2016. An hour and a half later, 90 minutes later, this is what that parking lot looked like. Okay. So I have a real estate company and a real estate school. Do you think I'm worried about real estate company and real estate school business? No. When Monday morning rolls around, all of a sudden we're worried about wet carpet. We're worried about our employees who essentially some of them flooded as well. All right. So we rightfully so had an emergency, right? And what's good about having an emergency fund is we had money set aside, all right, for an emergency, to where, do you think anybody in Baton Rouge did real estate business for about 30 days? No. Why? Because 40% of Baton Rouge flooded in 2016. So ultimately, we were able to do what we were supposed to do, which is get our business squared away, get our employees squared away, get our family squared away, and really didn't have to worry about the income that was not coming in because we had our emergency fund. All right. So think about your real estate business. If your real estate business were to shut down for 30 days due to some natural disaster, yes, it's stressful, but wouldn't it be nice to go, we're fine for 30 days. Let's go ahead and move forward. So what you're doing is operating from a position of strength as opposed to a position of fear. So that's really what emergency funds are for. Is we don't know what's going to happen, but should my business stop for 30, 60, 90 days, those things can happen. And me being in Louisiana, we have hurricanes and floods and that sort of thing. I'm not going to say frequently. But it is something that we have to deal with. And we had another one come through Baton Rouge in 2019. Again, 45 days, zero real estate transactions, effectively zero real estate transactions. And so we've kind of been forced to have that emergency funds as well. So that's why I say savings is different than investments. Savings cannot substitute for investments. Christina Wise is a real estate agent in Austin. She teaches some financial wellness as well. She has a great quote. She says, money works harder than we do, right? It doesn't get sick. It doesn't get tired. It doesn't get disabled. It works 24 hours a day, 7 days a week, 365. Actually, that's 27. I've never noticed that typo, but there it is. But my point to you is part of the reason that we want to put money aside for emergencies, we've given you that, but we want to put money in a separate account called investments. And that's why we want to talk to our banker, right? And one of the things that we're going to talk to our banker about, we're going to say, we're in real estate. And what do I need to do to prepare today if I find an investment tomorrow? All right. Well, you could argue that for the past 2.5 years, there haven't been a lot of investments out there. You could argue just the opposite as well. But as supply starts creeping up, what we're going to find is I do think that there may be more opportunities that are out there. And you're in real estate. Some of you work with investors. The one question that I would ask you is, when you see a deal, why are you giving it to an investor? Why don't you take the deal yourself? And that's kind of the part that I'm looking at. So I do think that real estate is an investment. A lot of agents miss the mark, mainly because they're not prepared. So if I have money in an account and that account is labeled investments, and I see a real estate investment, then now I can act immediately. Does that make sense? So if we've talked to our banker and we're financially prepared, we've got money in our investment savings account and we're financially prepared, when we see an investment, now we can strike. Instead of picking up the phone and calling somebody else, now we have the ability to leverage our business for that investment. So I'm a big fan of it. After all, you're the expert in the market. So when you see a deal, jump on it. You have the ability to control your retirement through real estate investments. Real estate is your present, but it also needs to be your future. And you can, again, many of you have seen the chart of the stock market. You give any 10-year period in the stock market and any 10-year period in the real estate market. Real estate market typically outpaces it due to appreciation there as well. One of the strategies that can be used is I can have a real estate, an income producing a property in real estate. I can continue to pay that down while I'm working, right? So I take out a loan, we get some rental income. Instead of pocketing the rental income, I can certainly pay that down during my prime earning years while I'm working now. And then when I retire, that's paid off. And that becomes my retirement money. So that's a good strategy that can be used. And again, it doesn't really matter. You can pay it down in 5 years or 10 years, kind of depending on the investment that you look at as well. Also, some tremendous tax advantages in terms of depreciation during your prime earning years. So you can literally, in some ways, and when you get to a certain level, right, some of you have worked with investors. I have investors that call me that say, I either need to write a $500,000 check to the federal government, or I can go buy a $500,000 piece of property. Well, that's what they're doing, is they're leveraging real estate. They know that they're going to have to give up some money. So I would much rather purchase a property than give that money to the federal government. So that's just kind of, again, some things that we can work on as well. So savings and investing, two different things. Go talk to your banker about that as well. We'll spend some time, just a little bit of time here, talking about the accountant, probably one of the more important individuals that we're going to see here. The first question that I get is, do you need one? And the answer is absolutely. You need some type of tax professional, mainly because non-tax professionals that do their own taxes have twice the error rate and an increased chance of being audited. Right. So you need to make sure that you're in line with your tax professional. You do need to realize that it is a partnership. So you need to be very, very comfortable with a tax professional. It's going to be by far and away the least efficient side of your business. There's a ton of courses out there on sales and generating business, but there's not a whole lot of courses on that as well. So it's going to be the least the least efficient, typically, side of your business. So when you find a tax professional, you want to think about talking about 3 times a year. Okay. If the only time you're talking to your tax professional is in April, you're making a mistake. I think because I always equate that to, let's look at right now. So we've got May the 24th, and it's a Tuesday. How many closings do you think are going to happen Thursday and Friday of this week? A ton, right? It's the end of the month. It's a holiday weekend. People want to move out / move in over this 3-day weekend. So from a title company standpoint, from a lender standpoint, these next 2 days, they're going to be pretty busy, right? Does that mean that they can't do their job effectively? No, they're going to do it great. But if I were to call a title attorney on Friday, chances are they're going to answer my question, get me off the phone, and then move on to the next thing. Well, that's exactly what you're doing if you're talking to your CPA or your tax professional in April. All they're doing is looking to get your return done. They're not looking for tax advantages. They're not looking for all of these other things. They're just trying to get you off the phone so they can go on to the next client. So that's why it's a good idea when we want to start to talk about business building, when we want to start talking about deductions, when we want to start talking about our goals and our dreams and how we can be protected from a tax standpoint. April's not the time to do that. right? May, June, July, during the summer where they're a little bit less distracted. We want to go and sit and talk to them as well. We want to talk to them at late October, early November. So right around Halloween, just before Thanksgiving. By that time in real estate, I kind of know how my year's going to end. About mid-November, I kind of know where my year's going to end just before Thanksgiving. So I kind of have all of my assets in line. So I want to meet with them in the end of October, beginning of November, so we can start planning. You know, sometimes it's, hey, Brent, you really need to buy a car to take that deduction. Hey, Brent, we really need to move some money into maybe an IRA or a SEP or something along those lines. And the reason that I like meeting in November is it kind of gives me a little bit of time to do that. Sometimes I've met with them the last week of December and everything feels a little bit rushed. So I like end of October, early November, where we just kind of say, okay, here's kind of our end of the year plan. We're ahead of schedule this year. We're behind schedule this year. We've had a good year, a not so good year, a level year. We can really start doing some tax preparation for all the things that need to be done before New Year's Eve. And then the shortest of all the meetings needs to be in March or April. And it's basically, hey, we talked in December or November. Did you do what you said you were going to do? I sure did. And then we can go ahead and file that return. Does that make sense? So I really think from an accountant standpoint, and from that standpoint, what you need to be able to do is have one that you trust, have one that you're willing to talk to. If you can't pick up the phone and call your tax professional and tell them all the nitty-gritty details about your finances, you need to find a new one, right? It truly is a partnership, all right, in terms of you need to be able to lay out your financial details. And again, my wife and I have just made a point that we don't socialize with our tax professional, right? And it's something that we're friendly, but we're not close friends. And it's just something where we wanted to keep a little bit of a distance. So we selected one that we can really open up to. And there's not really a whole lot of social interaction that's going to be there as well. So just a couple of things that we can look at from a tax standpoint that can be helpful. The next one we want to look at is a financial planner. If the IRS is going to force you into a SEP or an IRA, you need a financial planner to someone that you know and you trust. Also, your accountants and your financial planners, along with your bankers, wonderful sources of referrals. So when you sit down with your financial planner, when you sit down with your tax professional, say, hey, if you have any other clients that are interested in purchasing property, right? Again, I told you that I had a client that called me and said, hey, I'm either going to write a $500,000 check to the federal government, or I need to buy a $500,000 worth of property. Guess who told him that? Their CPA. Right. So ultimately, if we can get in with the financial community, your financial planners, your CPAs, they're wonderful sources of referrals because they're the ones that are telling people what to do with their money. And if it's advantageous for them to purchase real estate, it's, hey, you need to go purchase real estate. Go talk to Brent Lancaster. He's a client. He's a good friend. He's going to take care of you. Right. So bankers, financial planners, CPAs, very, very good sources of referrals there as well. But unfortunately, you can have real estate as an IRA. It's incredible. Well, for me, it's incredibly complex. For you, it might not be, but make sure that you have someone that knows what they're doing. But ultimately, the way a lot of these tax deductions set up is they effectively force you into an IRA or a SEP, or kind of how a simple plan, depending on how your structure is. But ultimately, you're going to need a financial planner to help you with those. So again, reach out, find one you trust, and they should be able to help you with some of those instances as well. Again, any questions, feel free to shoot them my way. I'd be more than happy to answer any of those things that we have there as well. The last thing that we want to talk about in terms of building your solid financial foundation is a mentor. And I'm talking kind of to both sides of this. If you've been in real estate for a while and you don't think you need to be a mentor, then you need to be a mentor. And if you're relatively new to real estate or you've never had a mentor in real estate, go find one. And what that means is you need someone that you can bounce things off of, right? And it doesn't necessarily need to be in your office. Obviously, your broker would probably refer you having a mentor in your office. But if you're relatively new, if you're looking to scale your business, if you just have questions, right? Find someone that's willing to answer those questions. Someone that's willing to take you under your wing and be able to, that you can really rely on, that you can lean on, and quite frankly, can hold you accountable for those things as well. So I do think having a mentor to be able to talk to, particularly, you know, if business is down 30%, then you kind of need somebody to commiserate with, right? And if you're a relatively new, if you've been in the business for 3 years or less, you may have never experienced the kind of cycle we're going in. But somebody that's been in the business for 25, 30, 40, maybe even 50 years, they've been through this cycle a ton. And they can offer some wonderful wisdom and some wonderful guidance in terms of how to get through with that. So if you're in this class and you don't have one, seek one out. If you are in this class and you say, I don't need a mentor, then you need to become a mentor, right? Go find out someone and when someone asks you, hey, I'd like you to be my mentor, take that as a badge of honor and really try and grow. I mean, that's another way that you can leave your legacy, right, is to be able to train those agents that are in turn going to flourish as well. A lot of folks look at it as competition. I look at it as abundance. I think you're going to grow. Everybody's going to grow a little bit more. Sort of the rising tide raises all ships. That can be super helpful as well. So mentor, particularly if you're just getting started, and just say, hey, I'm looking for a mentor in your next sales meeting. Say, I took a class with a guy and he recommended I have a mentor. Is anybody open to the idea? I'd just like to have coffee maybe once a month and just sit down for an hour and chat with you, right? It's not hard, right? It costs you a cup of coffee to be able to do that. So just a couple of things that I think are going to be here. Seeing no questions, what we'll do is just kind of wrap a couple of things up. I'll give you my my final thoughts a little bit about what we are. The characteristics of a successful business. What are the things that we can find in a successful business? First thing, don't spend all the money that you bring in. All right. So if you're spending it all, then you're going to go broke, right? We want to make sure that we don't spend everything that we bring in. I'm a big fan of quarterly reports. And when it comes to budgeting, when it comes to business planning, it is very difficult, or at least I found it very difficult being in real estate to do it monthly, mainly because one month is a little bit different than another month. October, November, particularly December of last year, that was rough for us. First 2 weeks of January was rough for us. Second week of January, kind of things got a little bit better. February was about even. March and April things started picking up, right? So from a business standpoint, it was very hard for me to budget monthly. So what we started to do is we started to budget quarterly. So I look at January, February, March, boom. All right. It's a lot easier. That the ups and downs are a lot smaller when you look at over a 3-month cycle than a 1-month cycle. So that's kind of where I've been able to be a little bit successful, is looking at things on a 3-month scale instead of month-to-month scale. So try that there as well. The second thing is someone's watching the numbers. You cannot know where you are unless you're watching the numbers. This is something that we track every single month, is to sit down and go, okay, how are we doing? Are we on track? Are we behind? Are we ahead? We basically based our entire business this year on 2019. So we went back to our 2019 numbers and we said, that's the kind of market that I expect. I did not expect a 2020. I certainly didn't expect a 2021, and 22 was a little bit erratic for us. So we looked at 2019 and we said, okay, in order to be successful, could I replicate the kind of numbers that I did in 2019, pre-pandemic? And I felt like I could. So that's really where we are. So every single month, and certainly on May, we looked at April rather, January, February, March, we looked at first quarter and said, where were we first quarter 2019? Where are we first quarter 2023? And we were pretty close, right? We were pretty close there as well. So 2023 was a little bit better than 2019. So from a business planning standpoint, going back to setting realistic expectations, if we would have run our business based on 2021 numbers, we would have spent more than we brought in. But ultimately, we set realistic expectations. But most importantly, markets change. And with interest rates being as erratic as they are, I think, personally, I think the worst is behind us. I think we're going to have a great third quarter. I think we're going to have a really, really good fourth quarter, particularly compared to 2022. And then 2024, baby, now that's the time. We're going to have some fun in 2024 in real estate. I can't wait to watch you there. But how do I know if I'm being successful in business? Is we're seeing how much money's coming in and how much money's going out every single month and every single quarter. So if you're not running a profit and loss statement, and that's just kind of something you want to write down for your CPA and say, how do I run a profit and loss statement? That's really going to be the numbers to tell you if you're keeping the money that you make. All right. Because gross is the money that you bring in. Net is the money that you actually make. So I think that's going to be important there as well. I like doing this exercise, right? I think real estate agents sort of feel like, all right, what do you think the temperature of the room that you're currently in is? Generally, an optimal temperature is about 72. I set mine on 70 because I'm wearing a jacket, right? So how do you think, or how many of you think that the temperature in your particular room is higher or lower, right? And I want you to kind of consciously think about it. And what happens is I find agents run their business this way. All right. It's not necessarily what the temperature of the room is. It's what they think the temperature of the room is. And you make adjustments by, I think this is working, or I think I'm making money. But if you're not running the reports, if you're not looking at it, on a consistent basis, then there's no way to determine if it's actually happening, right? Simon Sinek says, what gets measured actually gets done. And I would tend to agree. That book, Start With Why, it's okay. If you want to read it, that's fine. It's not really on my recommended reading list, but I do like that quote that came for it as well. And so what we'll leave you with is income versus profit. Income is very important. I do think income is something you need to focus on. Generating income, what we have found is from the time that we communicate with a buyer, right? 18 months ago, if a buyer lead came in, we would have basically a contract the next day, right? Is we were immediate buyers in terms of jumping into the market, trying to win offers and that sort of thing. Well, that has slowed down, right? And so what we've decided, or at least kind of what we've discovered, is there's about a 4-week lag time. If I have a buyer lead today, it's about 4 weeks before we actually get to contract. And that's important from a business standpoint, because in 2022, if I had a buyer today, that was a closing in June. Now, if I get a buyer today, that's a closing in late July, maybe even August. So income in my pocket is going to be delayed by about 30 to 40 days, just based on the way that the business works now. So income is very important, kind of working and seeing where that income is super important. However, it's not about income. Hopefully what we've been able to do today is get you to differentiate not only the money that you make, but profit, right? The money that you keep. So focus on that bottom number, focus on that profit, and that's what's going to lead you to the ultimate success there. Ethan, Marianne, I could keep going. I didn't know if there's, are y'all seeing some questions that I'm not seeing? Is there something out there that I don't really see any? Do y'all have any questions that we have? I'd be more than happy to kind of answer those as we get through there. But otherwise, we can kind of get rolling.
Yeah, I think we're all set. If anyone has any last minute questions, otherwise, this was a great presentation. Thanks so much.
Well, thank you. I really appreciate it. And as I said, Ethan has the slide deck. He'll be able to get that to you, and you're more than welcome. If you have any questions, feel free to reach out to me. I think my email is in that slide deck as well. But you guys were awesome. Really appreciate your time and attention today. And if there's anything I can do to better your business, please, by all means, let me know.
Okay, awesome. Thank you, and everyone have a great day.
Thanks, Ethan. Bye-bye.